and welcome to another Forex trading class. So we're going to cover topic number 7, which is about Forex Brokers 101. So without much ado, let's move into today's topic. The topic for this class is Forex Brokers 101. So, how to choose a Forex broker. Choosing a Forex broker will be the first crucial decision you make as a new trader. This is why you should always perform due diligence. That's do your DD and do your own research. If you started doing any of your own research on which Forex broker to use, you probably come across an alphabet soup of acronyms such as DD, NDD, MM, STP, ECN, DMA, OTC, LP, and then so on and so forth. And after coming across all these acronyms, you probably reacted with your own acronyms like OMG, WTF. If you haven't seen any of these acronyms yet, don't worry, you will. They are all over the interwebs, so you are bound to see them. It's inevitable. There's a lot of technical jargon that's used when describing Forex brokers. Some of what you read or hear about are probably outdated, inaccurate, or even misleading. For example, you may have read that retail Forex brokers can be in two types, shady and non-shady. Okay, seriously now, let's try that again. You may have read that retail Forex brokers come in two types, dealing desk DD brokers and no dealing desk DD brokers, NDD brokers. So, let's diagram this out. So, retail Forex brokers divided into dealing desks and non-dealing desks, which are DD and NDD. But wait, that's not all. Two types didn't seem to be enough for the marketing folks from the retail Forex industry. So they decided to use more acronyms in an attempt to differentiate Forex brokers even further and make them sound fancy. Under each type of broker, new labels were conjured up. We have under the dealing desk brokers, we have the market makers, that's the MM brokers. And under no dealing desk brokers, we have straight through process, which is the STP brokers. We have electronic communication network and straight through process, which is ECN/STP brokers. Then we have the direct market access and straight through process, which is DMA/STP brokers. So here's how the retail Forex taxonomy is properly marketed. Retail Forex brokers are divided into two, dealing desks, which are made up of the market makers, and no dealing desks, which are the STP, that's straight through process, ECN, electronic communication network, and DMA and STP. Wow, look at all these fancy acronyms, but there's a problem. This is not accurate. Here's how reality actually looks like. So retail Forex brokers are just dealers, and they are all market makers. Regardless of how retail Forex brokers present themselves on their website or market their services, there are really only one type of Forex broker for retail traders. And the most interesting part is that Forex brokers are not even brokers. Have you noticed that the word broker is not used on the websites of many so-called Forex brokers? And for the ones that do, it's primarily for SEO purposes to help their websites show up in search results on Google. So SEO means search engine organization. Basically, why is this? Because technically, they are not really brokers. There's actually no such thing as a retail Forex broker. Calling a Forex broker a broker is a misnomer, which is defined as a wrong or inaccurate name or designation. If a Forex broker isn't really a broker, then what is it then? While the image earlier provides a hint, the answer to this question is like the relationship status that some of you all might have displayed on Facebook in the past. It's complicated, but have no fear. Our goal is to help you learn what Forex brokers really are and how they operate. And to help explain what a Forex broker is, let's start with a story. B. How Forex brokers kinda work. Once upon a time, two frenemies, Batman and Spider-Man, were hanging out. They were lounging on the couch watching a movie, Justice League, Snyder Scott. But after a couple of hours, their attention span started to drift. Even Batman began to get annoyed at watching himself as his character on screen constantly growls in a low, deep voice due to his bitterness of not having innate superpowers like the others. All of a sudden, Spider-Man jumped to his feet with excitement and shouts, "Yo, Bruce!" "Call me Batman." "Whatever, Bruce. Anyways, I have a fun idea." "Oh, I like fun. What is this?" "Let's play a guessing game on whether the price of something will go up or down." "A guessing game? You spiders are so clever." "Dude, I'm not a spider. I just acquired spider-related abilities after a bite from a radioactive spider. There's a difference. Just because I wear a spandex suit with a spider symbol doesn't mean I'm actually a spider." "Sure, whatever. My bat suit is still better. It associates my nipples and my absolutely chiseled sets of abs. Anyways, I'm interested. Not only am I wealthy, I'm also brilliant. My conjunctions always turn out correct. Please elaborate on the details of this game." So Spider-Man says, "This game works like this. Try to guess if the Great British Pound US dollar exchange rate will go up or down. Let's say that the current exchange rate is 1.4000. Do you think it will go up or down?" So Batman doesn't trust Spider-Man. He unlocks his bat phone and looks up the current Great British Pound US dollar exchange rate on Google and confirms that it is 1.4000. He wants to make sure Spider-Man isn't just pulling numbers out of his spider butt. "I think I will go up." No, Batman now says, "I think it will go up." So Spider-Man now said, "Oh really? Let's make a bet then." Batman says, "What kind of bet? How will it work?" Spider says, "If Great British Pound US dollar goes up, I will pay you difference between the price right now and whatever the price is when you decide to close the bet. But if Great British Pound US dollar goes down, you'll pay me the difference. Payouts will be in cash. Also, you can close the bet whenever you want. What do you say?" To which Batman says, "Let's do it. I'll take that bet." Batman is now long 1 unit of Great British Pound United States dollars at 1.4000. This means that a 1 pip move equals 0.0001. 1 hour later, Spider-Man mentions to Batman that Great British Pound US dollar has risen to 1.4100. It has gone up 100 pips. "Yo, Dark Knight, the exchange rate has gone up to 0.01 or 100 pips." Batman checks his bat phone and lo and behold, Great British Pound US dollar has indeed risen to 1.4100. "Not sure how this price will go up," says Batman. "I'm out. Let's close the bet." At the start of the bet, Great British Pound US dollar was at $1.4000. At the end of the bet, Great British Pound US dollar was at $1.41000. So the difference of $0.01 or 1 cent. Gosh, damn it. My spidey sense doesn't seem to work on the Forex market. Looks like I lost. Your payout is 1 cent, that is $0.01. Don't spend it all at once. So Spider-Man tosses Batman a penny. Batman gladly accepts the money and after having some greedy thoughts says, "All I made was just a penny or $0.01 profit. This type of tiny profit might be good enough for a spider, but not for a bat. If I only made a bigger bet, I could have made a lot of money and become even wealthier. Okay, Mr. Spoiled Batman, or Mr. Spoiled Bratman, let's make the same bet, but this time, instead of betting 1 unit worth of Great British Pound US dollar, let's bet 10,000 units of Great British Pound US dollar." To which Batman says, "But I'm not carrying $10,000 worth of money." My bathsuit is too tight. It's like wearing black skinny jeans that cover my entire sexy body. And Spider-Man replies, "Oh, and here, I thought you were rich. How much money do you have on you?" Batman checks his bat wallet. So, Batman says this: "I have $20, excluding the penny that I just won from you." "No problem, Batsy. How about you just pretend that I've loaned you that entire amount? This way, for every one pip move, you gain $1. So this means if Great British Pound moves up to $100 again, instead of making 0.01, you'll make $100. That's what Spider says. And again, Spider's now replied, "I don't trust dudes who wear tight black suits with capes, so I'll use your $20 as collateral to cover the initial risks if the price falls and moves against him." Spider-Man replies further, "Think of it as a security deposit. If you win the bet, you'll get it back. If Great British Pound US dollar starts to fall, rather than pay you, instead of pay up, you might decide to jump in your Batmobile and leave. I don't want to end up empty-handed. So holding your $20 as collateral will protect me. If you try to leave without paying, your $20 will be forfeited to me." Furthermore, Spidey says to Batty, "Also, if the price falls more than 20 pips, you won't have any more cash to cover any losses beyond that. So I'll automatically close the bet and keep your $20. As long as the price doesn't fall below 20 pips, which is the value of your collateral, the bet remains open until you tell me to close it." Then Batman replies to Spidey by saying, "Okay, sounds good. What about you? Are you sure you can pay up this time if I win again?" Spider-Man flashes an evil grin. "Of course, I'm an Avenger. You can trust me." "Fine," says Batman. "Fantastics, let's begin," says Spidey. Now, Batman checks his bat phone and verifies that the current Great British Pound US dollar exchange rate is at 1.41000. "Okay," goes Batman. "I'm betting that it will go up from 1.4100, its current price. Here's my $20 to open the bet." Spider-Man suddenly senses Great British Pound US dollar will continue to rise, so he tries to style by pretending not to hear Batman. "Hello," says Batman. "Did you hear me?" Unlike snakes, spiders aren't deaf. "Here's my $20 to open the bet." Spider-Man goes, "What was that?" "So you do want to open a bet? My price for Great British Pound US dollar has changed. It's at 1.4150 now. You still want to make the bet?" Batman goes, "Dude, what the hell? I thought you just said Great British Pound US dollar was at 1.4100. Now you change the price all of a sudden?" Spider-Man goes, "That's my new price. So are you in? Better hurry before I change my price again." To which Batman says, "Fine, I'm in. I'll bet it will go up from 1.4150. So Batman is now long 1,000 units of Great British Pound US dollar at 1.4150. A 1 pip move equals $1. A couple of hours later, Spider-Man announces that Great British Pound US dollar is now trading at 1.4350. Great British Pound US dollar has gone up by 200 pips. Batman goes, "I would like to close my bet now." At the start of the bet, Great British Pound was at $1.4150, and at the end of the bet, Great British Pound US dollar was at $1.4350 US dollar. So the difference is $0.02 or 200 pips. But since the bet size is 1,000 units, Spider-Man's payout to Batman is $200, which is gotten from $0.02 times 10,000 units. Further marker, looks like you won the bet again. It's gonna go up by 200 pips, which means you won $200. So with the imaginary 10,000 units that Spider-Man conjured up, Batman has made $200. Spider-Man pays $200 out of his own money. Spider-Man pays $200 out of his own pockets and also returns the original $20 that was used as collateral. With just $20, Batman has worth $200, a 10 times return. I think Great British Pound will continue to, just as Batman was about to continue his sentence, he said, "Damn it, the bad thing now, BRB." 20 minutes later, let's play again. I think Great British US dollar will continue to go up, but I want to increase my bet size to 100,000 units. Batman has said, Spider-Man now says, "Oh, we got a whale over here. Looks someone wants to trade bigger. You sure you don't want me to call you Whale Man or Bat Whale?" To which Batman gives him his grin. Okay, says Spider-Man. "I can increase your imaginary loan to you. My price for Great British Pound US dollar is 1.4300. But this time, since your bet size is bigger, I will need $200 from you as collateral." Batman hands Spider-Man his $200 he just won. Batman is now long 100,000 units of Great British Pound United States dollars at 1.43000. This means that a 1 pip move now equals $10. A couple of minutes later, Great British Pound US dollar has fallen to 1.4235, a drop of 5 pips. Spider goes, GBP USD is now down 5 pips. This means you have an unrealized loss of $50, which is your 5 pips times $10. He says further, "If you want, I can close out the bet now and take the $50 from your collateral as payment and return the remaining $150 to you." But Batsy goes, "Hell no. Don't be a pest. I still believe GBP USD will go up. The bet stays open." "Okay," says Spidey. 5 minutes later, GBP USD plummets. But Spidey goes, "The price of Great British Pound US dollar has quickly dropped to 1.4275. You are now down 25 pips. This means you have an unrealized loss of $250. Since your collateral of $200 isn't enough to cover this loss, I've closed the bet and your collateral is now mine. Thanks for the $200. So, in this simple story, there's a lot to unpack. For example, notice how Spider-Man literally creates a guessing game from his mind when he could make bets on the direction of the price of anything and make money if the prediction is correct. 2. Spider-Man can make up any price he wants. 3. Spider-Man can move his price at any time, even when Batman is about to open his bets. That's 3. 4. Spider-Man can make up any bet size he wants, regardless of whether Batman has enough money. 5. Spider-Man is always taking the other side of the bet and nobody else. This story provides a lot of hints on how trading with a retail forex broker works. In case it wasn't obvious, Batman is you, the trader, while Spider-Man is the forex broker. Notice how Spider-Man or Batman didn't actually own any British pounds. No actual quids were ever exchanged. They were simply making dollar-dominated bets on the price fluctuation of Great British Pound US dollar exchange rate. So with retail forex trading, you don't take ownership of the currency. You are basically making a bet with your forex broker on whether the price of a currency pair will rise or fall. The payout is the difference between the price when the bet was made and the bet was closed. Either you or the broker will have to pay the difference depending on who ends up wrong. The risk here for you is that your forex broker defaults or doesn't have the money to pay for any profits that you've made. So let's return to the story and see how this could happen. So the next day, Batman and Spider-Man meet up for breakfast. After finishing their avocado toast topped with chopped almonds and a drizzle of smoked olive oil, Batman stares deeply into Spider-Man's eyes and says, "Let's play that guessing game again. I think Great British Pound US dollar will go up today. My bet size will be 100,000. Spider says, "Okay. My Great British Pound US dollar's price is at 1.4300. I'll need $200 from me again as collateral." To which Batman hands Spider-Man the $200. If you didn't notice, Spider-Man magically created a 100,000 unit position size and required just $20 of margin. This is an example of leverage trading. 1 hour later, Batman asks for the current price of Great British Pound US dollar. Spider-Man says GBP USD is now trading at 1.4600, to which Batman exclaims, "Booyah! Great British Pound US dollar has gone up 300 pips. At $10 per pip, I've made $3,000 in profit. I'm gonna buy me a new bat boat." Spider goes, "Oh, congrats, bro, but we have a problem." Batman says, "What?" Spider says, "I can't pay up. I don't have the money." Batsy goes, "What do you mean you don't have the money? But you took the bet." Spider says, "I did, but I didn't think I'll lose. The only money I have is the $200 you gave me as collateral. I can give you back that." WTF, what about my $3,000 payout? Spider-Man looks up and points to the sky. Spider goes, "Look at that. It's the bat signal." Batman looks up and sees nothing. When he looks back down, he discovers that Spider-Man is gone. In this scenario, the house went bust. Spider-Man took the opposite side of Batman's bet, but didn't have the capital to fulfill his obligation to Batman. This is known as counterparty credit risk. Can the other party of a transaction pay? When you open a trade with a Forex broker, you and the broker become counterparties of the trade. Just like Spider-Man, the broker takes the opposite side of your bet. Are you sure it's able to fulfill its obligation to you? While your broker makes sure that you can pay if it wins or you lose, it's also important that you make sure that the broker can pay you up if you win and it loses. Spider-Man also vanished without returning the $200 that was used as collateral. So Batman also ended up losing all the funds that he gave to Ant-Man. Spider-Man ran or jumped away with Batman's money never to be seen again until his next movie. Legitimate Forex brokers would prefer to stay in business rather than go bust or disappear with your funds. Unlike shady Spider-Man, they do have ways to manage this risk. In a later lesson, we are going to look under the hood and explain to you what actually happens when a Forex broker executes your orders. You will learn how Forex brokers manage their risks so they don't just go bust. But this is just one of several things to be careful considering when choosing your Forex broker. In order to properly evaluate retail Forex brokers, important to know how a typical retail Forex broker operates. So here's what we will cover. Who are you trading with? Unlike Batman in the story above, we're not going to know who we are trading with. Even if you did, that doesn't mean you should blindly trust them. Even Batman was duped by a fellow superhero who was supposedly a good guy. Your Forex broker is a faceless corporate entity that requires you to send it money so you can open trades with it. Are you sure they are who they say they are? Is it a legitimate copy that really provides Forex trading services? Or is it a fake broker? How do you know the company wouldn't just take your money and disappear? Who are you really trading with? Is it a reputable broker? So, what are you actually trading? Notice how Spider-Man or Batman didn't actually own any British pounds. No actual pounds were ever exchanged. They were simply making dollar-denominated bets on the price fluctuation of Great British Pound, United States dollar. So, if you're not actually buying or selling, what are you trading? So, where are you actually trading? Notice how Spider-Man created a market to bet on the price direction of Great British Pound US dollar for Batman with just his imagination. Did you also notice how there were only two parties involved? Whenever Batman made a bet, Spider-Man did not go out into the market and search for another person to take the opposite side of the market. Spider-Man simply took the opposite side of all of Batman's bets. As long as both agree on the terms, real bets were made and were expected to be honored. Nobody else was involved. So, if you're not trading the market, where are you trading? How do Forex brokers manage their risks? During the last bet made between Spider-Man and Batman, notice how the price of Great British Pound US dollar moved unfavorably against Spider-Man, and it ended up not having the money to pay. Because Spider-Man is the sole person taking the opposite side of Batman's bet, Batman should have made sure that Spider-Man would be good for the money. The same concern should be made with retail forex brokers, since they operate in a similar fashion. So, if your forex broker is always taking the opposite side of your trades, how does it avoid the risks of going bust and taking your money down with it? Are the prices that your forex broker quotes you fair? Notice how Spider-Man can quote any price he wants. Fortunately, Batman was smart enough to use his bat phone and reference his third-party data source, which is Google, to verify if the price that Spider-Man was using was accurate. But what if he didn't? Once the bet was made, Spider-Man could continue to make up prices in his favor. For example, he could say that Great British Pound US dollar has fallen 500 pips, even though it hasn't, and Batman would be forced to bet at a loss. So if your forex broker is able to quote you any price it wants, how do you know the prices you see on the trading platform are fair? Where do the prices come from? What is the quality of your forex broker's order execution? Notice how Batman wanted to open a bet when the starting price of Great British Pound was at $1.4100, but Spider-Man declined and changed the price to $1.4150 instead. This is known as slippage. Slippage is the difference between the expected price of a trade and the price at which the trade is actually executed. Slippage can occur for a number of different reasons and can work for and against a trader. In Batman's case, he experienced negative slippage, which is where Spider-Man gave him a worse price than expected. This results in a smaller profit or a larger loss. Being quoted a specific price, even if it's accurate and fair, means nothing if your order can't execute at the set price. How can you determine the quality of its order execution? Where orders will be executed at your request prices. We will cover these topics in detail and more in the following lessons. So, Iron Man says I should tell all this to you guys. Hello readers, do not end up like Batman. Read all the broker 101 lessons. Thumbs up. Part C. What is the forex broker? Part C. Is the forex broker a legitimate company? Who are you trading with? Is the forex broker a legitimate company? Can you trust it? Unlike Batman in the story from the previous lesson, you are not going to know who you are trading with. Or even if you did, that doesn't mean you should blindly trust them. Even though it started as fun and games where Batman and Spider-Man were supposed to be making friendly bets on trying to guess where Great British Pound US dollar was headed, it didn't end up so friendly. Batman ended up getting duped by a fellow sparrow who was a supposedly good guy. Forex brokers. In order to trade Forex, you need a trading account with a provider of online foreign exchange trading or CFD trading services, more commonly known as retail Forex brokers or CFD providers. When you open a trading account with this company, you will need to deposit money to the account so you can trade. Are you sure you can trust these brokers? Unfortunately, not all brokers are honest and trustworthy. A big issue with the retail trading industry is the lack of transparency and unclear regulatory structures with insignificant oversight. Due to its decentralized and global nature, the forex market is less regulated than any other financial market, making it more prone to fraud. And with the rise of internet-based trading platforms in the early 2000s, forex trading has become even more accessible and popular among retail traders across the world. This explosion of knob traders, which we call fresh meat, creates more opportunities for dubious behavior by shady brokers like fraudulent schemes, order manipulation, refusal to pay out for wins, or preventing account holders from withdrawing their funds. In the past, many forex brokers were unregulated, which means that these brokers were not operating under the supervision of a governing body whose role is supposed to protect traders from being fleeced. So if you are scammed, there's no hope for any legal resource. Your money is gone. Fast forward to today, and while the retail forex industry has slowly become more regulated, shady brokers still exist who should not be in the business. This is why the most important first step is verifying the legitimacy of the forex broker you choose. When you are looking to trade forex, it's important to identify brokers who are reputable and avoid the ones that are not. You don't want to end up being part of the unfortunate group of individual traders who fall prey to a forex scam. In order to identify reputable brokers from shady ones, you need to do your homework before disposing a large amount of money with a broker. The forex broker you choose is going to be your first critical decision as a new trader. Why? Because you're going to be handling over your money to this company. So the first thing you need to make absolutely sure, especially before you make your first trade, is once you transfer funds to the broker, if you also be able to withdraw those funds, you might make the presumption or assumption that once your money is in your trading account, you'll be able to trade with it and then withdraw it whenever you want to cash out your profits. But don't just assume this is true. Verify. Never assume, always check. You can be the most awesome trader in the world, but if your broker disappears with your money, then it doesn't matter. You just end up being the most awesome broke trader in the world. If you want to stay awesome but avoid being broke, then here are some important questions to consider before choosing a broker. Is it a real company? Is the first broker a real company? Don't be fooled by a nicely designed website. Make sure there's an actually legally incorporated company behind that website. Here are things to look for to verify that they are a real company. What is its formal business address? Where is it incorporated and registered to do business? How long has it been in business? Can you find anything on Google about the company? Have there been any recent press releases or articles about the company? Where is it located? Does the company have a physical office address? Don't be fooled by a listed address on their website. Make sure there's a real office behind that address. A simple way to check if their office is an actual office is to use Google Maps. Enter the address in Google Maps and see what appears. And to get a better view of the office, you can use Google Earth. Enter the address in Google Earth and see what appears. Zoom in until you see the buildings they are in. Is it an actual office building or does it look suspicious? If it looks like the building does not relate to their description, are you sure you really want to hand over your money with this broker? If no building is present and instead you are seeing a warehouse or a tiny tropical island or even worse, an empty plot of land, you probably want to pass on this company. Who runs the company? Do you know who runs the company? Or is it a ghost corporation with no active employees? Who are the principal of this company? A principal is generally someone who holds a significant ownership stake in a company or has the formal title and ability to control the company's activities. For example, principals could be the founder or co-founders, president, CEO, COO, CFO, other C-level officers, or any person or entity that owns 10% or more of the company. Beware of the ownership opaque companies, where their true owners and or company offices aren't disclosed. This lack of transparency might be due to the fact that it's actually a criminal enterprise whose members wish to remain anonymous. If you are trusting a company with your funds, you should know the people who are in control of the company. If something goes wrong, you know who to hold accountable. Can you contact the company? Does the company provide multiple ways to contact them? You want to make sure your broker is where you want to make your broker is there when you need to ask a question or have a problem. Does it have a phone number? Does it have an email address? Does it have a live online chat? What are the customer support hours? It's not enough to see all these three listed on their website. Just because it looks like there are multiple ways for you to get in touch with the broker doesn't mean it's true. Verify that they all actually work and not just for show. Call the phone number. Does someone pick up quickly? Send an email. How long does it take to receive a reply? Automated replies don't count. Start an online chat. Does it work? Or are you simply asked to send a message by filling out a form? If the online chat does work, are you talking to a chatbot or an actual human? What are their customer support hours? Is their staff available 24 hours a day, 5 days a week? You can also test how good their customer support is by opening a demo account. Once you've logged into their demo trading platform, send them a question using their support feature. Since you're a potential new customer who may open a live account, they should be responsive. If not, it should make you wonder how their support will be once you're already a customer. A reputable broker should have a dedicated support team that can answer your questions. In live trading session, phone access or live online chat is a must since an email reply may take days. At the end of the day, you want to make sure that the broker will be there for you when you need them. Is your money safe? Do not rush into opening a live account or real money account without knowing how your funds are handled. You need to ask the following questions. What bank do you use to store customer funds? Are customer funds held separately from the company's bank account? The Forex broker should be using a reputable bank. Ask who they use. Would you trust your funds with an unknown bank? Before you deposit any funds with a Forex broker, make sure it uses segregated accounts. A segregated account is a dedicated bank account where all its customer money is kept completely separate from the company's fund. This means that your money is kept entirely separate from the broker's money. The main reason for segregated account is to prevent the broker from using your funds outside of your trading account. If a Forex broker does not segregate accounts, it will be able to use customers' funds for operational expenses and maybe an exotic sports car or two for the CEO. Or it might just use all the deposited funds to buy a boatload of Bitcoin and disappear. In the past, shady brokers have used their customer monies for their own purposes, putting this money at unnecessary risk. You do not want your broker to use your money for the wrong purposes. A segregated account protects your money against dishonest and fraudulent behavior from brokers. Should a broker become bankrupt, it also ensures that customer funds are easily identified. In the event that the Forex brokers become insolvent, your money would not be affected. Depending on the country, regulation states that segregated accounts can't be used to pay creditors and customer funds must be returned to the customer. Imagine a broker's money and his customer's money all mixed together. If this was the case, companies who your broker owes money would come after your money. Having segregated accounts ensure that customer funds will be easily identified and returned in case of bankruptcy. Segregated accounts between customer funds and the broker's funds provide safety. If your broker does not use segregated funds, do not deposit your money with them. So in summary, in order to trade Forex, you need to use the services of a retail Forex broker. And since you will be depositing your hard-earned money, you need to do your own research. Let's review the questions that you should consider. Is it a real company? Where is it located? Who runs the company? Can you contact the company? Is your money handled safely? There's one last question that you should consider that's critical or crucial. Is the forex broker licensed and regulated? This topic is so important that it deserves its own lesson. Part D. Is the forex broker licensed and regulated? So, is the company licensed, regulated, and authorized to operate as a forex broker where you live? Notice the extra emphasis on where you live. It's not enough to verify a broker's regulatory status. You need to know which regulatory agency is registered with and whether the jurisdiction that the regulatory agency oversees covers the country where you live. Forex market regulation refers to the rules and laws that firms operating in the forex industry must follow. The purpose of regulation is to protect you from undisclosed financial risks, abusive practices like price and order manipulation, and fraud. In other words, regulation tries to protect you from shady brokers doing shady things. There is no single global body governing the forex market to police the massive 24 hours, 5 days market. Instead, the responsibility mostly falls on a country-by-country basis. Most countries have a regulatory authority that lays down a framework of rules and standards that must be followed by retail forex brokers. These rules include being registered and licensed with the regulatory body, undergoing regular audits and reviews to ensure that companies comply with the regulatory requirements. Each forex regulatory body operates within its own jurisdiction, and regulation and enforcement vary significantly from country to country. In short, regulatory requirements are established where all forex brokers under their jurisdiction must comply with. If a forex broker doesn't comply, the regulatory body has the power to issue fines and disciplinary action. These fines can be substantial and provide a strong incentive for companies to operate within the law. And if the fine doesn't work, the regulatory body can ultimately revoke that company's operating license should the regulatory violations be particularly severe if the company doesn't satisfactorily implement changes to prevent future violations. If this happens, the forex broker can't do business in this jurisdiction anymore since it would be operating illegally without a license. Forex regulations differ from country to country. This means that not all regulatory agencies follow the same kind of regulations or offer the same type of financial protection. For each regulatory agency, they have their own specific regulatory requirements and their area of jurisdiction. Not only do the regulatory requirements differ, but the enforcement of these requirements also differ from country to country. You can create all the rules you want, but if you're not going to enforce them, then the regulatory agency is basically a paper tiger. Aside from paper tiger, not all regulatory agencies are credible. Some of the regulatory agencies is so-called offshore jurisdictions are essentially nothing more than a rubber stamping office. Regarding jurisdiction, there are different levels of strictness. For example, the US and Japan are considered to have the most stringent regulatory agencies. Essentially, the stricter the jurisdiction, the more protection that individual traders have. But the most costly it is for the broker to operate in that jurisdiction. This is due to stricter requirements such as having a local physical office and staff, requiring a large amount of money upfront just to even start the business, plus additional money set aside to avoid going bust and be able to pay out when their customers win. Regularly submitting reports to verify compliance with all these licensing requirements. Not only is there usually a huge upfront cost, but licensing costs also have to be maintained annually. Even with all the added compliance costs and headaches, reputable brokers still choose to register and be regulated in stricter jurisdictions since it improves their credibility and builds trust with their customers. Let's be clear though, a broker that is regulated doesn't actually mean you can blindly trust it. Strict forex jurisdictions. So here's a map showing the jurisdictions that are supervised by regulatory agencies who are generally considered strict. So we have two in the North America We have some in Europe and Asia, and one in Australia and one in New Zealand. These are the strict ones. Let's proceed and see what they are. So United States, we have the Community Futures Trading Commission, and we have National Futures Association, NFA. So these are the two in the United States. In Japan, we have the Financial Service Agency, FSA. UK has Financial Conduct Authority. Canada has Investment Industry Regulatory Organization of Canada. Cyprus, that's in the European Union, has Cyprus Securities and Exchange Commission. Also, the European Union has the Malta Financial Services Authority. Singapore has Monetary Authority of Singapore. Hong Kong has Security and Futures Commission. Australia has Australian Securities and Investment Commission. New Zealand has Financial Markets Authority. So most forex brokers regulated in strict jurisdiction are less prone to scams. Questionable forex jurisdiction. So here's a map showing jurisdictions that are questionable with regard to adequate customer protection. Either jurisdiction is lightly supervised by a regulatory agency with minimal requirements, and they are in red, or has no supervision at all, which is black, and allow brokers to self-regulate themselves. So you can see them in the map there, the regions that are lightly regulated and the ones that are self-regulated. So here's a chart to show you all the regulated agencies, those lightly and non-regulated. You can see them for yourself. You can go through all of them for yourself. They're all listed here. Belize, the British Islands, Cayman Islands, Cook Island, Marshall Islands, Kenya, Mauritania, South Africa, St. Kitts and Nevis, Seychelles, St. Vincent and the Grenadines, the Vanuatu. On the map, you'll notice a lot of small tropical islands that are more well known as expensive tourist destinations with their fancy beach resorts. These islands are known as offshore jurisdictions, which are low or no tax countries with corporate laws that maximize financial privacy and minimizes regulatory interference for both individuals and corporations. So why do forex brokers like to go offshore? Fast and cheap to start a business, one reason. Minimal capital requirements, minimal or no taxes. No need to report activities to the authorities. No need for a local physical office and staff. So, forex brokers like to set up shop in these offshore jurisdictions to get around what they may consider overly restrictive regulations and high compliance costs in their own countries. Basically, the costs and difficulty of setting up a company and operating as a forex broker are much lower. So be wary of unlicensed forex brokers. If you Google forex broker, you'll probably come across many companies that operate as a forex broker without a license. An argument that unlicensed forex brokers make is that instead of having to spend a lot of money and time to obtain a license and comply with all the rules and requirements, operating without a license allows them to drastically reduce their operating expenses and leave them with more available funds to spend on the actual business, such as on marketing and promoting to acquire new customers. I don't know about you, but it's hard to trust a forex broker that started up with $1,000 of capital, has no license, and has no physical office or staff, and is strictly an online operation. An unlicensed company is not regulated by any regulatory agencies. This means that it is not bound to abide by customer protection rules, such as safeguarding customer funds, providing clear identification and disclosure of how it executes trades, resolving customer issues and complaints. They may promise better operating conditions or trading conditions, including deposit bonuses, tight spread, and ridiculously high leverage. However, we recommend avoiding them since the probability that these companies are scammed is high. If you experience unfair treatment, such as manipulation of trades that results in losses and inability to withdraw your funds, you will not be protected by any specific law or regulation. You will be on your own. Due to the company not being regulated, you won't have access to complaints procedures or compensation schemes in the event that something goes wrong or going wrong. There will be no regulatory agencies to turn to resolve disputes fairly and impartially and have the power to put things right. So why should you pick a regulated forex broker? A regulated forex broker means that it must comply with standards set by the regulatory agency, which helps ensure that the way the forex broker will conduct business with you is ethical and fair. If you are not satisfied with the level of service, or if you think you are being scammed by your broker, you can report a regulated broker to its regulatory agency. While the regulatory agency usually does not get directly involved in any conflict between a company and its customer, it will investigate any instance of fraud or customer abuse. If found guilty, the regulatory agency can issue big fines, revoke their license, and even permanently ban the broker from operating in the country. By requiring forex brokers to operate within a set of rules as defined by the forex regulatory agency, retail traders can have some confidence that when trading with a forex broker, they are treated in a fair and ethical manner. Lastly, why wouldn't you trade with a regulated forex broker? Why will you choose a broker who deliberately avoids being under a strict regulatory agencies? We are not saying that every unregulated broker wants to cheat you out of your money, but given that the retail forex industry is a history of being prone to fraud, or has a history of being prone to fraud, why take the chance? So, how to verify a broker's regulatory status? Every forex broker who is licensed and authorized to operate by the regulatory agency requires a unique ID number. Regulated brokers are required to display their regulatory information prominently on their website, so you should be able to easily spot their ID number, usually at the bottom of every page. The broker might claim to be based out of a specific jurisdiction, but is actually lying. The company could be falsely claiming another company's ID number, or worse, totally making up a fake ID number. This is why it's important to make sure to verify this ID number on the official regulatory agency's website. To help traders like you verify the regulatory status of a forex broker, most regulatory agencies maintain an online database that you can access in order to verify whether a broker is truly regulated by the specific agency. A regulatory agency's website should provide information about a broker, its owners and company executives, a brief history of its operation, and any regulatory actions they were taken against the broker due to non-compliance issue or customer complaints. For example, a forex broker may claim to be licensed to operate in the United Kingdom by displaying an FCA registration number. Rather than just blindly believe it though, you should visit the FCA website and verify their FCA license yourself. Verification can be done by performing a quick search on the FCA website. You can search by name or by the number and check if the regulatory information on the broker's website matches. If the broker is listed, make sure to verify the contact details listed and what's listed on the company's website. There are scam brokers who pretend to be listed companies. This is why it's important to use the contact details that you registered to confirm you're dealing with the actual company before doing business with them. If you're unsure about a broker's regulatory status, contact the broker directly and inquire about their current regulatory status. If you don't get an answer, that's a red flag. Trade with a broker that has a physical office in your country. If you want your money to be safe, trade with a regulatory broker that has physical operatives in the country you live in. Using forex brokers who operate outside your country and in foreign jurisdictions are not always legally required to maintain licenses with regulatory bodies, especially in offshore jurisdiction, where governance is weak or doesn't exist. If the regulatory agency, the broker, and you are all in the same jurisdiction, you'll be better protected because you can report your broker to the regulatory agency if you feel you're being cheated. If the broker doesn't have a physical office in your country or isn't regulated in your country, you are most likely going to find no legal recourse if something goes wrong. So test drive your broker. So you're interested in a forex broker, and before you open an account, you've done your research. The broker looks safe, so you open a live account. You probably have an amount that you want to deposit. Don't do it just yet. Take the broker for a test drive first. Make a small deposit. Open and close a couple of small trades. Request to withdraw your entire account balance. Confirm that you've received the funds. This allows you to test how easy the process is to get money in and out of a broker. How long did it take to process the withdrawal? It shouldn't take more than 24 to 48 hours. If it takes too long, that you actually have to follow up and bug the broker about your withdrawal request. Beware. If everything goes well though, and you're pleased with the test drive experience, you can then deposit a larger amount. By the way, if you start receiving phone calls from the broker trying to encourage you to deposit additional funds into your trading account, either before or after you requested the order, that's not a good sign. It's fine if the broker is reaching out to see if you need help using your trading platform, but you should wonder why they are already trying to get you to add more money and trade more. This has come to the end of Forex Broker 101. Hope you've understood what to expect from your brokers and possible scenarios of licensed and unlicensed brokers. For any inquiry, you can contact me on the following handles: Facebook, YouTube, Gmail, Telegram, Twitter, and of course WhatsApp. I look forward to hearing from you, and I assure you I shall give you a speedy feedback. Thank you and have a lovely day.